because the area around tax appeals is a big thing, and he will elaborate on that. And maybe Jairus, you can just say hi to participants.
Good afternoon, members. Thank you, Collins, for the wonderful introduction. My name, as he has said, is Jairus Mutua. I'm an expert in taxation. Thank you very much.
All right. Thank you so much. Yeah, so without wasting so much time, we get into understanding rental income tax and compliance. And I hope my screen is visible. Everyone is able to see my screen? You can just put a thumbs up. Thank you so much. Thank you so much. Yeah, so I believe the audience we have today, we have property managers and landlords. And our key objective today is to achieve compliance, but not only compliance in terms of taxation, but also optimizing cash flow and reporting accuracy because for you to be compliant when it comes to taxation, there is the whole issue of cash flow management and reporting accuracy. So we cannot look at compliance, tax compliance alone. We have to look at it from the collectively from the cash flow and reporting accuracy. So our session today will meet the following objectives. By the end of it, you will be able to understand rental income tax obligation. You will be able to maintain proper books of accounts. You will be able to understand the use of systems to generate accurate reports. You will also be in a position to avoid overstatements or understatements of taxes, which again, eats into your business. You will be in a position to understand how to manage cash flow for tax efficiency and also how to stay compliant with eTIMS. We will, towards the last minutes, we have set aside for question and answers so that we can spend our time effectively. So why tax compliance matters? So by the end of this session, you will be able to avoid penalties and interests, because that is one of the main issue why whenever we hear about tax, be it rental tax, VAT, and any other kind of tax, that is what comes to our minds. If you don't pay, penalties and interest will accrue. You will also be able to build credibility with the regulators and financiers, because if you are in good books with the taxman, even when it comes to investors and other regulators, you be sure that you will be also right with them. You will also be able to improve financial decision making. When it comes to financial decision making, the whole aspect of tax is incorporated into it, because this is an obligation, and understanding it actually improves your decision making. It will also enable scalability of property investments, because you can never scale if the tax man is at your nose. So tax compliance actually brings even more than the benefits that we have just talked about. So overview of tax rental tax income. This applies to income from rental properties, but again, it is divided into two, where we have the MRI, which is residential rental income tax, and this is a simplified regime for qualifying landlords or for property managers who are managing, hostels, rental houses, and all that. And this one, actually, it also depends with the income that you are earning, because when it comes to rental, residential rental income, we are talking about landlords who are earning between 288,000 up to 15 million annually, taxed at 7.5 million. But then when it comes to the standard income tax regime, is now anyone who is above that threshold, and now which now turns in as business income, which is filed annually as a business income tax. So the key compliance requirements, here we talk about registration with KRA, which I know many have registered with KRA, and it is important for if you are in real estate management or property management, you be registered with KRA, because there are many more other regulations which are being developed and which are going to make you, if you are not registered, then you get limitations on quite a lot of services. The other key compliant requirement is maintaining proper books of accounts. It is by maintaining proper books of accounts that you are sure of the accuracy of tax that you are paying, because most of the time we overpay or even underpay, and both of them has risks. Because of overpayment of tax, that one is a risk on your cash flow. Underpaying, then it attracts penalties, and we'll dive deeper in the next slides. The other key compliant requirement is filing your tax returns on time, because if you know the tax payable in time, you will be able to pay it in time, and that comes in from if you are maintaining proper books of accounts. Pay taxes when they are due. It is always advisable that you pay your taxes when they are due and not earlier than that, because look at the tax payable which you have not yet paid, in terms of you're not removed cash from your business as an interest-free loan, because this is money that belongs to the government, but you still have it. So paying it when it is due gives you an opportunity for you to spend that money as a loan, as an interest-free loan. Then you'll be able to pay when it is due, but at the same time, leaving some returns for you if it is well utilized within the business. The other key compliance here is to be able to issue compliant invoices. We all know about eTIMS, and those who don't know about eTIMS, we are also going to get into understanding actually what eTIMS means. And my colleague Jairus is going to expound more on that. Now, let's come to the foundation. And the foundation is proper books of accounts. As I mentioned when we started, we cannot talk of tax compliance without talking about proper books of accounts, because you know how much tax that you are supposed to pay from the reports that you have generated from whatever kind of a system that you are you have. So your compliance starts here, where you are able to quantify your rental income in terms of keeping proper records of your rental income, that is per unit and per property. Where you are also able to record all business-related expenses, that is repairs, utilities, management fees, and stuff. Where you are able also to maintain tenant ledger, because now under this tenant ledger, it's possible you are able to quantify accurately each income from each unit, because I know we run properties which have mixed kind of houses, because you'll have a one-bedroom house, you'll have a bed-sitter, you'll have a three bedrooms house. So keeping each tenant's ledger separately helps you be in a position to quantify the accurate tax. And it is very important, because now where the government is heading, a time is coming whereby employees who are paying pay-as-you-earn, at some point, they will end up getting a rebate, because normally, as you compare, if you compare with the consultants have a leeway to reduce their expenses, to reduce their taxable income using the expenses, one of them being rent. Now, if that comes now and the government realizes for us to collect more tax or more rental income tax is by giving rebate to pay-as-you-earn employees, who in return must give details of the landlords that will give details of rental income. Yeah. So someone is raising a point. Okay, so yeah, I've seen a question raised, but then that is going to be handled at the point of Q&A. Yeah, so I was talking about the importance of why we need to keep accurate tenant ledger, and I was explaining that as policies continue evolving and being developed, we'll find ourselves in a point where, as property managers, we have got no place to hide, because even the tenants that we are having who are paying pay as you earn will be linked into the system to make sure that they give details of the rent that they pay. So it is very good to be proactive other than reactive, and be on the proper side, so that when these regulations find you, they find you at the while you have already complied, and you will not get to issues with the government. Then the other one, which is also very important for you, is bank statement. And I know this one is going, Jairus is going to expound quite a lot on it. Now, what are some of the common mistakes that happens if we don't have proper books of accounts? We end up guessing income and expenses, or underestimating purposely or unpurposely. And again, if you underestimate income, that means you are paying less tax, and over time, it will still raise red flags with the government. With expenses, if you are not keeping proper books of accounts, what will happen is that you might overstate expenses, again, reducing your tax, again, raising another red flag. Or underestimating your expenses, if you don't capture all your expenses, declaring more income, and again, that also has an implication, because this will come in at the point of when you will be filing your annual returns. Because for the rental income, this is for MRI. Remember, this is purely on your gross income, and it is final, because although I don't want to get deeper into that, I would want my colleague to highlight that. Then if you don't keep proper books of accounts, you'll also have missing deductible expenses. That is still what I've explained under expenses, and also leading to inaccurate tax filing. Now, for you now to be in this position where you are able to accurately file your returns, it goes back to having proper books of accounts and proper accurate reports. That cannot happen if you do not have systems. And I think that is the reason why we are here. We have been invited by EazzyRent, who have a very good property management system, and they have talked a bit about it, and you can still get more details from them. But then what you need to understand is a good system will help you track rent collections, will help you monitor your arrears, will help you record expenses in real time, and generate financial reports instantly. Now, there before, when systems had not developed, we would mostly use Excel sheets. Yes, it would work, but then you realize with Excel sheets, they are likely, or it's likely for you to make errors. And once you make errors, it's not easy for you to rectify. And by the time you come to realize, you will have already gotten into financial losses. And by the use of a system, actually, it will help you declare the right tax, pay the right tax, but at the same time, preserving your cash. Because remember, cash is king. And if you are not able to monitor your cash flow, even at the time of you paying the tax, you realize you do not have cash itself. You will not have the cash itself, which again will put you into either debts or at the same time defaulting, ending up now getting these penalties that that we are also running away from them. Now, what are the ideal reports you should have as a property manager or as a landlord? It's very important for you to have an income statement, which is a profit and loss, because this will show you properly, this is my gross income. Because remember, that is if you are in the MRI regime or residential tax regime, your gross income is very important. And with a proper cash, proper income statement, you will be in a position to see or to actually use the accurate income. Now, cash flow statement is also another ideal report that you should have. And remember, these reports are easy when you have you have systems, because it's just a click of a button and they come out. Now, what is this cash flow statement? Now, cash flow statement helps you understand, yes, I have this income, which is, say, 1 million. But what I have in the bank is less than that, because most of the time, your profit is not actually what is in the bank. Reason being, you might find it elaborates further on your collections. How do you do your collections? Because if you are struggling with collections, by the end of the period, the government will, or the KRA will not look at what you actually collected in cash, but what you invoiced as your total income. That is what they will base to charge you the tax of 7.5. Now, in this case, if you have you have bad debts or you have rent that has not been collected, you will not be in a position to know that. If, for example, you are managing a number of units, many units, so cash flow will help you reconcile your income statement and bank and be in a position now to make proper and wise decisions on how to improve and make sure that you collect your income, so that at the point of you paying this rental income tax, you are not straining because someone has not paid you and it is affecting your cash flow. Rent roll reports are also very important for you, because again, they also you also see how your rental income has been increasing over time. Then also expense breakdown report is also very important, because again, it also shows you actually the cash flow that you have. Over to the next slide. I talked about overstating tax, and I'm very sure for all our participants here, not once or twice you will find someone has overstated tax. It's painful, because definitely it eats in your cash flow. And what we mean by overstated tax is paying more than it is required. It is painful, and it is caused by ignoring allowable expenses. And the reason why you are ignoring them most of the time is not willingly, but it's because if you do not have a very good system that monitors your expenses or captures your expenses, or poor record keeping, again, which is also brought about by non-utilization of finance management system. Now, in this case, we are advantaged to have someone like EazzyRent, who is offering a system that can actually help you in this. So what is the impact of overstated tax? One is reduced cash flow. Cash flow is king. That one is for sure. If you are not able to manage and pay, to manage your expenses, to record your expenses so that it's easy for you to tell accurately the amount of tax that you are supposed to pay, it will affect your cash flow, because you have given money that you should not have given. That also affects, if you do not have the cash flow, it also affects your investment opportunities, because it in every property developer or agent to scale. And for you to scale your business, this comes from reinvestments that you are going to make or growing when you grow organically, that is, when you are plowing back the profits that you are making from your business. So if you are not in a position to control your expenses or to monitor your expenses, then this is a risk that you run to experience. Now, we also have the issue of understated tax. And understated tax comes with many other risks. And this is where you are paying less than what is required. The causes unreported income. You fail to report or to capture some income, hence you declare less tax. Now, someone might ask, how can KRA end up knowing this? I mentioned that the way KRA is evolving, many policies are being put in place. Remember, Kenya has adopted technology at a very high rate. And with the technology connection, it brings everything into a very small village. It's very easy to monitor everyone or to use even other third parties to make sure that you are exposed. So being proactive, as I mentioned, and ensuring that you put your structures proper and have proper systems will help you avoid this in the future. It's better you start as early as possible so that then you will not come to get into these risks that will affect your business. Incorrect calculations coming in from, let's say, for example, you are using Excel sheets. It's very easy to miscalculate or to miss a formula or to use the wrong formula, which will give you the wrong calculations. Now, most of us probably, because we are from diverse disciplines, you realize not many of us who are in property management who are accountants, who will look at it from the third eye, or probably who have not employed services of an accountant. So you realize in yourself, it's very easy maybe to not to capture some of these things. So when you are using a system, you realize it doesn't matter whether you are an accountant, as long as you have been enlightened on how to use that system. So what is the impact of understated tax? One, definitely penalties. Interest will also accrue. Legal risks from, as KRA either sues you and all that, depending with materiality of unpaid tax. And even the whole issue of the name, your name in this business sector. Remember, you have collaborators like investors, who probably you will need to look for investors at some point. Now, one of the things that we look at is how you sit with the taxman. How are your books looking with the taxman? So it is very important to avoid understating your tax as well as overstating your tax. Now, I want us to look at the eTIMS, and at this point, I would want to bring in my colleague Jairus to take us from this point, and as we move to the next other slides. So, welcome, Jairus, and please enlighten the participants on the eTIMS and the whole issue of electronic tax invoice management system.
Collins, thank you very much. And wow, you've done a good job. You covered almost everything. Am I audible?
Yes, you are.
Okay. So mine is brief on the eTIMS, which is a system that was introduced in Kenya, I think the last two years, because it came into effect from January 2024, whereby through a KRA notice, they required all guys doing businesses in Kenya to have electronic to register via eTIMS. So basically, I saw a question earlier whether eTIMS is compulsory, and the answer is yes, it's compulsory. And I'll talk eTIMS in regards to rental income. And I want to bring into speed two items in regards to rental items. Rental income is divided into two members. We have the residential income, that is any business doing in the business of rent or residential that it's up to 15 million, a turnover of 15 million per annum. So any other income above 15 million, that one is classified as a commercial income, and the taxation is different. So there are two ways to register for eTIMS. There is the online, which is now the eTIMS, and then the other one is basically where it's a system-to-system integration, and especially for businesses that have bulk invoicing. And I think EazzyRent, the team will also guide the members on that. So for the purpose of the residential income, the sorry guys, for the
Yes, we can
purpose
hear
of the
you.
residential income, um, all businesses are required to have an eTIMS, to be onboarded on eTIMS, and rental income is subjected to a 7.5%, which is a final tax, meaning that at the end of the year you do not need to pay another tax. You only instruct your accountant to balance the ledger to the equivalent of the 7.5%. Then on the purpose of the commercial income, this is treated like any other business, which is now subjected corporate tax withholdings. Sorry, guys, I'm using my.
Yeah, we can hear you now.
Yes, sorry, I just received an incoming call. So I was on the commercial income where I said it's subjected to the normal classification of taxation, which is it's subjected to VAT, to corporate tax, withholding. But of importance to mention on the residential income is that it's exempted from VAT. So, like for example, Collins, if you own a residential building whereby your annual turnover is less than 15 million, you are not supposed to issue your tenants with a receipt that shows a VAT on it. And I think, Collins, that is all that I can cover, unless there is any question.
Yeah, I would also want you to cover eTIMS requirements for landlords.
Okay. The eTIMS requirement is that it's just the basics. One, if the landlord, they operate the business in terms of in terms of whether it's individually registered or it's a company. So if it's a company, there is a whole list of what is required for you to be onboarded on eTIMS. One is if it's a company, the directors of that company you must submit the TCC for the directors, TCC for the company, and the personal details of the specific directors. Then of importance is you attach a copy of a pro forma invoice showing that you need to issue a eTIMS compliant invoice. Then the other one is a business permit to show that you are not operating, is not a ghost company. For individual, it's more or less the same tax compliance for the individual and a business permit, together with the personal details in regards of the physical address of the specific property. Thank you, Collins.
All right. Thank you so much, Jairus. I have seen someone who had requested the presentation to be shared. Yeah, that one is going to be shared through the EazzyRent team. The other part I wanted us to look at quickly, and mostly majority of us, we are aware about it, but just to make sure that we don't just ignore it, is filing the rental income. I'm sure, yeah, as I've said, majority no, because we have been filing. But for those who are new or probably wants to get into it, is once you have been registered, the whole process is that your PIN or the PIN that you are using will have the rental income tax as an obligation. And then it will be in a position now to give you, once you get into iTax, to give you now the opportunity to fill in the rental income for the rental income part. If you don't have the obligation, that you will not be in a position to. So once you access the iTax, you'll go logging into KRA and putting your PIN. You will navigate to returns, and under returns tab, you will click the file return, select the obligation, and in this case, you'll select the income tax rental income. Now, if this is not in your PIN or in the business PIN that you are filing the return for, if this part is not going to appear, it must, your PIN must carry that obligation for this to appear. Then you will fill in the details. You will find there are two sections. Section A, where you specify the return period. Section B, where you enter the total gross rent received. The system automatically will calculate, and it's 7.5, not 10%. It will calculate by itself and give you the tax due that you are supposed to pay. Then you will submit, pay, where you submit and generate the payment slip for the tax payable. Now, you might be doing this probably exactly by the end of the month. And I would advise you to do so by the end of the month, so that it is easy for you to know the total tax that is due to be paid. Now, what is the need for knowing that? As I mentioned, this for you sits in like interest-free loan, because it's money that you're supposed to pay. But then if you're in business, you should also look for ways of how this money can create some return for you. Because in such a case, you have been given a window for you to pay. Paying it early, okay, it's good, because you don't know what happens. Maybe someone will want to pay early in the month, so that you will not face the risk of finding yourself without cash flow. But then if you are managing your cash flow well, it is one way of getting free loan to use in your business. But then you ensure by the time you are supposed to pay, then that money is available. You pay and avoid taxes. Avoid penalties, that is. Now, what are the benefits of eTIMS compliance? The whole issue of audit risk. You have reduced audit risk. Remember, the reason why I'm talking about audit risk is KRA expects, or not KRA, but the regulation expects businesses to be audited by the end of the period. And KRA themselves, they do actually enforce their tax audits. And most of the time, these tax audits don't leave the entrepreneur or the business person with a good taste in their mouth, because we know KRA, they can be rough and all that. So if you comply with eTIMS, and that creates transparency, and you will not call for these unnecessary tax audits. Better record keeping. If you comply with eTIMS, you will have better record keepings. And one of the things that Jade has mentioned is that eTIMS, for people who are not running systems, eTIMS is like a system in itself. It's a system in itself. The way you would have the likes of EazzyRent, the QuickBooks and all that, because it helps you capture your income and your expenses. So with that, KRA sees your business from their side. And it also reduces, the whole issue of maybe being tasked to look for an external system and all that. But that is when you are operating from a very small scale. Because as your business grows, then a bigger and elaborated system like EazzyRent will be very important for you, because of capturing or giving you reports on beyond tax and tax compliance only. Then you will also have a simplified tax filing if you are eTIMS compliance, because everything is in the system. And nowadays you realize once you get into iTax, the homepage will show you what you are supposed to pay, or your total income versus your total expenses. So the KRA have really advanced, and we also ask property managers or landlords to also upscale also in our operations to make sure that we are aligned. Good. Now, we can, as I mentioned when we were starting, we can never talk about tax compliance without talking about the cash flow management. As much as we are talking about the rental income being on gross income, the rental tax being on the gross income, it's also very important for you, because the moment you deduct tax from your income, then it leaves you with somewhere whereby you might even find yourself not able to manage your overheads. And it's very important to run a system that can give you like a whole report, so that you are able to know these are your profits and this is the cash that the business has, so that then you can sustain your business. Now, most of the time we confuse profits and cash. And I think it was important for me to mention this, because we are not only looking at tax. You can be profitable, but then unable to pay your tax if the cash is mismanaged. It is quite important to be able to, as you run as you run your profit and loss, your cash flow management in terms of the cash flow reports be up to date, so that you are able to tell, this is the hard cash that I have. Your profit and loss might show you a profit, but that profit is not actually what might be reflecting in the bank. And I mentioned this earlier. This will come from unpaid invoices that you have already invoiced, other indirect or uncaptured expenses. Let's say, for example, those are emanating from the bank, like bank charges and all that. So running a cash flow management or ensuring that you have a very robust cash flow management will help you be in a position to sort out the tax obligation as and when they fall due. It's also very important to have tax as a planned expense. At the end of the month, if you are able to determine the tax payable at the end of the month, it's very good for you to provide for that tax and be able to know that this is the tax that I'm supposed to pay. Probably you put that money aside, or if you are going to use it, you are very sure that where you are using that money is going to come back, because this tax is a monthly obligation and KRA will not want to know whether you had cash or not. It's always also very important to create a cushion whereby you set aside a portion of rental income so that a time when it comes and you do not have cash, you can fall back and, cater for that. Then you reimburse it back. It's a way of cash flow management. Then avoid the last minute pressure. We Kenyans, we are known for, running last, or having to do things at the very last minute. And it is at the very last minute where you find many people are, for example, filing tax at the same time. That is when the systems are failing. That is when probably you realize you do not, once you compute your tax, you realize actually you do not have that money with you at that point. Yet it is the last minute. So it is very important for you to be doing it as early in advance, because it will help you eliminate the last minute pressure. It will also ensure you know your tax, the amount payable, as early as possible, and see how you can utilize that for the benefit of your business. Then avoid giving government an interest-free loan. I mentioned this earlier, where we overpay our taxes, where we use funds. We need to be in a position to use those funds. I think I've repeated that not once or twice. And the other thing is plan payments strategically. Plan payments strategically so that you know actually the date that you're supposed to pay. And if you use that money, you know when that money should be available so that you don't fail to pay your taxes. Ensuring cash availability for tax. Have a separate tax account. Now, this is very important to know. If you are running a system, let's say, for example, EazzyRent, and EazzyRent can give you more details about their system. You can create a tax control account in the system so that at any given point, by a click of a button, you are able to see it. And you don't need to start looking through files and papers for you to know the tax that you're supposed to pay. So creating a separate tax account in the system is very important so that you are able, at any given point, you are able to see how much of tax you are supposed to pay. Monthly tax provisioning, that is setting aside money for tax, so that in case of you do not have cash or you haven't been paid 100% by your tenants, you are able to fall back and get money from an emergency, kind of an emergency account. Then do a cash flow forecasting. Cash flow forecasting is where you are able to plan and see ahead. Like you plan for 6 months and you are able to see your business. This is how your business or direction your business is going. And with that, where you are able to avoid some of these hiccups that might come and find you, without any cash to pay. Sample monthly cash flow, monthly workflow, issuing invoices, collecting rent, record income, capture expenses, generate reports, allocate tax provision, monitor your cash. You will get this presentation, and when you need more information, we can always avail. So risk areas to watch: rent collected and not recorded, high vacancy rates, in your property, because that will raise a red flag with KRA if they see fluctuations. Delayed tenants payments will affect your cash flow, and untracked expenses. So what are the best practices for landlords and managers? Adopt a property management system, not just any kind of system. Reconcile your accounts monthly, separate business and personal finances, so that then you will not get into a cash flow crunch. It's also very important to work with a tax advisor and an accountant so that you don't end up making or you can avoid mistakes that are avoidable. So the last part is, takeaways. Ensure you have proper books of accounts, because that is the foundation of compliance. Ensure you have systems. Avoid both overpaying and underpaying your tax. Ensure that you have cash flow planning, which is forecasting, and stay compliant with eTIMS. Thank you so much, guys, for listening. And now we can offer maybe time for questions and answer. Thank you so much. Yes. What was the question for Nancy? Um, Jairus, I would want you to respond to that before I add some few notes. Hi, Jairus.
Sorry, Collins, huh? I didn't get this.
Yeah, there is a question from Nancy. If you collect rent of 20K per month and you pay tax, do you need eTIMS?
Thank you, Nancy, for that question. eTIMS is not a tax, And for the sake of maybe I give a brief introduction of why eTIMS was introduced by KRA or by the government. One, they wanted to, let me say, get rid of what we used to call the missing traders. So eTIMS is a system for ease of accounting of your business transactions. So yes, if you make if you get a rental income of 20,000, you pay the taxes. It's a requirement that you are required to onboard on eTIMS. So it's a compulsory.
Mm-hmm. Have you been answered, Nancy?
Yeah, but I'm wondering now with 20K rent,
Mm-hmm.
and and these are houses that they're back in shacks. Then I'm thinking now, what is the essence? I'm paying KRA the tax that is due. What do I need? Why do I need eTIMS? Even if it is a system, I'm paying them their tax. Now I don't know, still don't understand these eTIM things, especially with that kind of money,
Uh-huh.
which sometimes does not even come as a whole. Rental is sometimes is a messy. 1 month sometimes you don't have clients the whole month.
Nancy, to bring you to speed, if you look back at what we call the Tax Procedures Act under the VAT Act 2013, KRA described a proper invoicing or a document that KRA termed it as a proper invoice. And the invoice, they describe the invoice should have a date, should have an invoice number, should have the breakdown of the VAT, the net amount, and the gross amount. So they removed all that and said for any transaction that need to be accepted by KRA, that document must be generated via the system, which is now the eTIM system. So there is no shortcut. My dear, you have to onboard on it so that you are in good books with them when they come and they will come for you to do audit. And it's free. It's free. Registration, whether it's an individual or a company, it's free in the system.
Now let me ask you another question.
Yes.
Now, how would you handle these tenants who pay bit by bit? As in a month, someone pays, then after Sijia 1 week, does it mean that you have to generate whatever? a receipt for them for the amount they've paid only. I mean, this thing is so messy. Because some of it is not like one off. Utapewa, mama shika hii kidogo kwanza, nikipata hiyo ingine nitakupatia hiyo wiki ingine.
You see the file. You have said you get a rental income of 20,000. You pay the taxes, meaning you see the submission of the 7.5% is on the following month before 20th.
Yes.
So you have a whole 2 weeks to prepare, because most of the tenants agreement is that rent is paid before fees.
Mm-hmm.
Yes.
CGM Mutua.
Yes,
Maybe
Jefferson.
would we say because Nasi has a tenant, whether he has paid or not, will we assume that for that month she should recognize that she has income, despite the fact that the tenant has delayed the payment, so that she can prepare an invoice for the sake of complying with the KRA, but again in a said record, know that we will be following up with this client to pay.
Jefferson, taxation is collected at the question we should ask ourselves is the tax point. What is the tax point of rental income? Is it on when you receive the money or when you invoice? So tax point is on when you invoice, is not when you receive.
And also to add, Jefferson, like any other business, tax point is when that income has been, like when you issue an invoice, that is when the income has been recognized and not when the cash is received. So that's how KRA looks at it. And that's why we have brought in the whole aspect of cash flow management so that it can cushion that. I don't know whether that makes sense to you. Any other question? Yeah. Irene can clarify that question.
The question is, let's say you are working and then let's say you don't have a job anymore. Isn't that considered income that is also supporting your family, or how does it work? Or there are no exceptions? Thank you.
Jairus, you'd want to take that, or I can go first?
There is no exception of rental income, and that's why if you look at the residential income, the percentage is 7.5%, which is a final tax. And I think the drafters of that Tax Procedures Act was to take care of that, compared to the commercial, which are subjected to like a normal trading business. So there is no exception. You only need to pay the 7.5%, which now becomes a final tax. So your income is not subjected to any other further taxation.
Okay. Now, with the invoices that have not been captured in the eTIMS, currently, with how eTIMS has been set, you cannot use those invoices, and it is advisable now to either push either your supplier to give you the invoices which are through eTIMS, or if they do not have, you change the supplier. As in KRA here doesn't give any option that if maybe your preferred supplier is not in eTIMS, no, they will require you either don't declare them because they are not in the system, or you go to the supplier who will give you an eTIMS invoice. They do not have any other provision.
Collins, to add on what you have said.
Yes.
If we remember very well, last year KRA said that for the expenses of the financial year 2025, they are doing validation. Huh? So for those of us who have tried to file returns for the same, you will see if it's income, if it's yourselves and you have under declared, the system will automatically reject.
Mm-hmm.
So the system is recognizing only the eTIMS compliant invoices.
Yeah.
Hello. Hello, how are you?
Yes, you can hear me.
Yes, yes. My suggestion is in relation to eating was that there's someone who has actually done a clarification on why it's essential to issue eating, whether you are receiving a rent of 20,000 or maybe even 10,000. It's because this issue of maybe KRA recognizing that as either an expense to their system, and this actually assists the people to now be able to, during the filing of annual returns, you are able to claim that expense on iTax. Otherwise, if you don't issue eating, then it means you won't be able to claim that expense as the person who is paying. Assuming I'm a tenant and I'm paying you 20,000, and maybe it's a commercial building, maybe. I'm just saying an example. So on that 20,000, if I don't do an ET, if you don't give me an ETIM on it, then it means it won't be recognized as an expense on my side. And I won't be able, it will have an effect of more taxes on my end.
Exactly.
Yes, so that's the reason why we are issuing ETIMs. Well, thank you.
I think as at now, tax has been simplified using the systems that KRA has adopted. Unlike before, where it was manual, and you will realize it was complicated then because somehow KRA would still do their audits based on the manual tax filing books that were used before. And they would still come and maybe follow up and get the unpaid tax. But we realized at that point, it was even so hard for you as an entrepreneur or a business person to actually show that you paid your tax because it was manual. Right now, because of the systems that KRA has, it becomes so easy and simplified to file and pay the tax that is due. And once you get into the eTIMS, you will realize that look at eTIMS as a system, which has simplified the previous way of, where you, as a small business person, you would have to go to the cyber for you to, go fill those forms and all that. in the system now, right now, they have linked your invoicing. You will just issue the invoice from the system, and your expenses that you receive, because you have given the PIN of your business, are captured and they will still appear automatically. So the system actually gives you the tax that you are supposed to pay. Then your role is only just checking and ensuring it is correct, because most of the time you realize these are systems and they also have hiccups, and it is your responsibility to raise that with KRA. Okay, I know everyone will be like, even if you raise an issue with KRA, how long is it going to take and all that? It is better raised than, it's better a raised issue than unraised one. Because if, for example, you pay less because probably you have been given, or there's an income that reflects in your system, which is not your system, it's easy for them to look at it and verify within a very short period of time. So from my own observation, yes, the system has been simplified.
Okay, Corinth.
Yes.
It's me here. You see,
Caroline,
like what
yes.
Nancy is struggling with, Caroline.
Mm.
We pay so many taxes, pay, rent, or what. There are so many. I'm like, is there a system that the government can come? And then after that, you have to do annual filing. And okay, there is technology which has made it easier. But after they take my payee,
yes,
they have already collected the money. Then I have to come and file. Then there are all these penalties, interest, and all this manner of things.
Yes.
So my question is, can the government just come up with a system where they are collecting money from the citizens without even having to burden us to follow them to do things? Is there a way? Like they say, me, I had 100,000, for example.
Yes.
The government says, Carol, I need only 40,000 from you. So I give them their 40,000 and they leave me alone. So there is carry on it. I mean, it's just all over the place. So I just wonder, is there a way the government can take what is due to them and I don't even have to come and do any filing? I've already paid them, that's it.
Okay, you see, probably when we will say everybody will be tech savvy and everyone or every income and expense will be in a system, you can say now that is a valid question to raise at that point. But now when we are still not adopted systems, government will not be sure of the amount that you are declaring for them to, to deduct the taxes. But then also, because taxes are different and they go to different government agencies, you realize rental income is for a specific government project. For example, we have VAT, which is different, pay as you earn, which is different, oil levy, and all other kind of taxes. They go to different books, government books. So they must ensure to make sure that each one is collected accurately. They use a specific avenue for each tax. There are many things that we complain, because I always say, even when it comes to even the kind of identification numbers that we use for government services, there are many, and we can only have one. Like, let's say, for example, your ID should sit in for everything else, other than having an ID, an HIF number, an SSF number, KRA PIN, and all that. But you see, a government has different agencies in terms of departments, which like are administering these specific incomes from the government. So they have to look for different ways or separate these incomes, so that it's easy for them to verify actually we have received in totality any kind of income that we expect out there. Because remember, the main income for the government is taxes. So they must make sure that they collect as much as possible. And by doing so is by separating all the revenue streams from all taxes that are payable, and make sure that those taxes each come separately for ease of, confirming that they are receiving what they are supposed to receive. That's what I would say. Thank you so much.
Bye.